Hello, my name is Susie, and I am a real estate professional and past educator located right here in the Seattle-Tacoma, Washington area, beautiful Pacific Northwest. In this video, I'm planning to speak towards where we think mortgage rates are predicted to head over the next couple of years, which is something that's on a lot of people's minds right now. Okay, hot topic right now, mortgage rates are on the rise. So, mortgage rates have increased significantly since the beginning of the year. Now, each Thursday, Freddie Mac releases what's called a primary mortgage market survey. And according to the latest survey, the average 30-year fixed rate mortgage has risen from 3.22% to 3.55% as of last week. It's important to note because any increase in mortgage rate changes what a purchaser can afford. So, to give you an idea of how rising mortgage rates impact your purchasing power, check out graphic number 1. How can you know where mortgage rates are headed? Well, it's always difficult to know exactly where mortgage rates will go, but a great indicator of where they may head is by looking at the 50-year history of the 10-year treasury yield and then kind of following its path. So, understanding the mechanics of the treasury yield is not as important as knowing that there is a correlation between how it moves and how mortgage rates follow. So, here's another graph that shows the relationship over the past 50 years. Now, this correlation has continued into the new year. The treasury yield has started to climb, and that's driven our rates up a bit. So as of last Thursday, the treasury yield was at 1.81%. That's 1.74% below the mortgage rate reported the same day, which was 3.55. And it's very close to the average spread we see between the two numbers. So the average spread is 1.7. So where will the treasury yield head in the future? Basically, with all this information in mind, a 10-year treasury yield forecast would be a good indicator of where mortgage rates may be headed. So the Wall Street Journal just surveyed a panel of over 75 academic, business, and financial economists, asking them to forecast the treasury yield over the next few years. The consensus was that the experts projected the treasury it will climb to 2.84% by the end of 2024. So based on the 50-year history following this year, that will put likely mortgage rates at about 4.5 in 3 years. So while the correlation between the 30-year fixed mortgage rate and the 10-year treasury yield is clear in the data, for the past 50 years, it shouldn't be used as an exact indicator because those are both hard to forecast, especially in this unprecedented economic time that was driven by a global pandemic. Yet understanding the relationship can help you get an idea of where rates may be going. So it appears, based on the information we have now, that mortgage rates will continue to rise over the next few years. If that's the case, your best bet may be to purchase a home sooner rather than later if you are able. So, bottom line is forecasting mortgage rates, it's very difficult. However, if you're either a first-time home buyer or a current homeowner that's thinking of moving into a home that better fits your changing needs, then understanding what's happening with the 10-year treasury yield and mortgage rates can help you make an informed decision on the timing of your purchase. All just kind of goes together. So if you have any additional questions, please reach out and I will do my best to help answer them. Thanks. I hope that helped and didn't confuse you just more.